Hello, everyone.
Hello, everybody. Welcome to Money Hour.
It's our second Money Hour this week, and it's great to have you all here. It's myself and Olga again, and we are happy to have you. Maybe a few words before we introduce ourselves about what Money Hour is. We decided, due to Corona, to do this now every week on Tuesday, 8 p.m. because we feel that it is very important that you have an easy way to access content about money and life in these times, that you have interesting deep dive topics with special speakers, and stay tuned with us till the end because we have a special speaker for you for next week, and because it's important to us to build up a community during these times where we can get through these troubles in together.
Yeah, and it's fabulous to have everybody with us. We put this all together to show you the daily news, as Desiree said, recap of the week, because especially, I don't know, who like me is working with children from home, you kind of try to cope with the workload and with the homeschooling. Maybe then you don't have that much time to follow every piece on the stock market. And obviously we would love you as a community to have a forum to exchange, to discuss, to learn more about money. And if you stick it out today for the next 25 minutes, I am going also to show you a fraction of my personal portfolio and what has happened with that in the past 6 or 7 weeks. So stay tuned.
For those who don't know SmartPurse yet, maybe just a few words about it. We are a learning platform because we educate women and men, of course, about finance and money. So if you're interested to start investing or to get organized with your wealth and your money, SmartPurse is a good place to start. We offer digital online options as well as physical meetups. So there is everything. Plus, you can also have our matchmaking and find an advisor you can trust. So it's a fully diverse option to really get up and running with your money, get smart with it, and also control your finances and your future, because we feel that's very important. Hugely important is also to mention we are fully independent. Everything we put out there is jargon-free and very practical. It is developed by women for women, so it's simple, straightforward. You get useful tips, and we hope also with that today, with that webinar. So it's Olga and myself. A few words maybe to you, Olga.
Yeah, so I'm Olga, as you can see on the chart, right? I worked for more than a decade in financial services. I specialize in women and money. So I'm one of the 2 women that changed UBS Wealth Management to serve female customers better, and ever since moved on. I've written a book on women and finance, did a first digital tool that didn't really work, and from there gained enough experience to do SmartPurse. And SmartPurse is my third entrepreneurial venture, and certainly the most exciting one. I feel deeply passionate about women and money. I believe that women's money will change the world, and that we all should have the opportunity to have affordable financial education across the globe.
I'm working with Olga since many, many years. I'm also an expert in financial services and especially in women in finance. I also worked formerly at UBS together with Olga and joined SmartPurse as an investor, but I'm also at the same time an entrepreneur. So I truly believe in the importance of money and women, especially as an entrepreneur, as self-independent, but also, that you can fulfill your own personal dreams in the future. I truly believe in that. So we have the topic for today, which has been selected by the community. So we will also ask you at the end of this week's webinar, the topic that you would like to be discussed next week. This week we have the opportunities about investing, and I already pulled out a poll question here, and we see that we have 60% on the call are actually already investors, so it's great to have you. But also 40% are really actually planning to start investing, which is, of course, now maybe it is the right time to start now. We will talk about this later. But first, let's have a quick look into the news. Yesterday, we see that Switzerland and UK is high up in the rank regarding corona cases. So on a global scale, we are in the first 10. So it is still increasing and the pandemic is still growing so far. We don't see an optimization or a change here in the next couple of weeks though. And we see also quite of bad news that in Italy, more people have been killed out of corona than in China. So also here, it is still fully in the going. We all still in quarantine at home and we need to stay here to make sure that this kind of like dangerous or new world will ending soon and we can all go back to normal life. But till then, we have also the stock markets, which of course are impacted a lot by the current situation. Yesterday, there was still a huge drop again. And also there is currently, we are entering a bear market. At least certain news tell that we might enter a bear market. It dropped 33% from the peak. We will also cover in a few slides what a bear market means and what you actually can do with it. So stay with us. But what happened today?
Just because we all choose to be optimists. I choose to be an optimist. I think there is not much sense in believing in anything else, as Winston Churchill put it. And so I think also the markets choose to be optimists today and started super strong, mostly believing that the government's aid actually will be helpful or will be agreed and huge packages will come. And I think partially, and that's my very personal view, it's also because everybody has kind of or is starting to settle in quarantine, getting used to the lifestyle, and so people's brains are watching from outside. So today, markets started strong, going up.
And on the next slide, you can also see the roller coaster over the last few weeks. So we see yesterday it was a drop, today it was an up again by 8.83%. So there is still a roller coaster going on. We all don't know what happens in the next few days. Hopefully we stay up, but we don't know. So let's be surprised and be prepared for everything. But what does that mean, a bear market? I mentioned it before that the market dropped actually drastically since the peak by over 20%. So a bear market is if from the peak to the bottom, the market drops by 20%. Usually as a benchmark here is being looked at as the S&P 500. And at the right side, you also see an explanation on the slide where this comes from. So it's actually from the form or the shape that bear is doing when actually attacking his victim. So this is where we might end up. Also impacted not only by the drop, but also how long it stays at the bottom. We don't know that yet, as we have seen the market today went up again, but still we would like to have a look with you on what that means and what you can do now. This is a question we receive a lot by people approaching us in our social media or through also the last webinars or through friends and families and all our community members. What to do now? It's a huge uncertainty, of course, because of the volatile markets. But here are a few things that maybe can help you. One is no emotion. Why is this important? No emotion or don't panic is important because the markets also from the past show that it will go up again. Always, if we had kind of like a crisis, the market went up again. At some point, we just literally don't know when this is. So stay calm, try to have no emotions. If you have a diversified portfolio already, you are fine. So don't worry too much. Otherwise, an advice you also read often now in the news and by banks and financial advisories, rebalance your portfolio. What does that mean? If you have a robo-advisor, usually they do it automatically because you have, based on your risk profile, a portfolio that matches your risk profile. So it defines how many percentage of, for example, equities and bonds, but also cash and other assets you should hold. If that kind of like goes out of balance, you need to align it back. If you don't have an advisor, or if you don't have a robo advisor, then you would need to do that on your own, or find someone who can help you in that. But it's important to get it back on your original strategy. Play for time. Increase your savings and cut back on spending. I think, Olga, that's already happening, isn't it?
Well, it's certainly happening with me. I'm also the rebalancing, because I was fiddling around today with a couple of online tools. Wasn't a really pretty experience in terms of bad connections, but in the end it worked. Yes, and cutting back on spending is probably an easy thing to do, even though maybe when you cut back, one also can make a donation to one or the other entrepreneur or people that need it the most at this point in time, as they are struggling to maintain their existence while their businesses are being shut. I just think it's very important, while we speak about investments, also to be always mindful that there is a whole lot of people struggling out there currently, having probably no time to think about where to invest, because they are thinking about where to pay the next bill from.
Sorry, that was too fast. And the tactical opportunities. Of course, in every crash, there is an opportunity. There are definitely certain options where you can maybe invest that have a good prediction for the future. We will look into that in the next couple of slides as well, what might be out there to watch out for. This is another question we receive often. Is now a good time to buy stocks or to even start investing? And we have just seen on the poll question before that we have a few on the call who are already investors. We have some that plan to invest, and we have some who are not yet, but they wouldn't be on the call if they not think about maybe entering the stock market or the investment market soon. So here are a few things that maybe are important if you think about, or if you're already in investing. A few key suggestions from our side is definitely, if you haven't started yet, maybe start with an automatic contribution. So you can easily do that directly from your paycheck to a diversified portfolio. Or you can just, break up larger amounts in smaller amounts, so that because it is easy to invest also with small amounts. You don't need to have $1 million, and maybe just starting with a couple of bucks every month, it already sums up in the end. And the last one is a little bit hidden by our images here, but research has actually shown that you need to be patient and forget about it. So investors who forget about their investments are actually performing very well, because they are usually diversified. Of course, that's always important. But if you forget about it, it will balance out the bad and the goods. So if you try to trade the market, this will usually not work. Also here in red is actually the best returns were made by people they either died or forgot about their accounts. So maybe think about it not too much and just let it go and see what happens.
And why is that? Because they were in it for a very, very long time, right?
Exactly.
There are all these stories about Bob, the worst investor on the planet, that basically invested all the time, or like 3 or 4 times when the market was on its highest, and then actually went down. And the guy invested, I don't know, $50,000, I think is the story. Don't quote me on that. And ended up being a millionaire. In the end, it is the time exposed to the market that counts. It is the diversification that counts, and the investment has to be low fees. Low cost investment, otherwise the fees eat away on your returns. And people often ask me and say, so Olga, what is it that you do? And no, this is not the moment where I'm going to show you the portfolio yet. You have to hang in for at least another 8 minutes. But people ask, do you do ETFs? Do you do it with a platform? Do you do it with a robo? Do you use a bank? Well, I'm not wealthy enough to have a private investment advisor. So I use both ETF trading platforms and a robo-advisor, or actually multiple of those. And I do like that approach because it allows me, of course, also to compare a number of tools and how they interact. And that proves to be a fairly good strategy. Actually, from a risk perception, I am in there for the long term since many, many years, but definitely not a bullish investor. But having multiple tools to use from and to use during the investments, I found very calming for my mind. Also, if one breaks down or should go bankrupt, at least I know that not all of the money might be lost, that there still is some protection in place. So don't be afraid to experiment, even with smaller amounts. It might sound ridiculous, but financial services is going through so much democratization at this point in time, with all the digital tools available to us, that nobody knows what the best tool is or what the best strategy is. And those who tell you that they do know, I think would be very interesting to know where they take that confidence from. And so there always will be a certain level of experimentation in it all. But then, you know, without risk, no gain. That is one of the oldest rules of investment, right?
And before I forget it, I actually forgot about to mention it in the beginning. If you have any questions, please feel free to just send them via chat, and we are happy to try to cover them throughout the presentation or at the end. This is just a slide for those who might be a little bit more new to the topic of investing. We mentioned before that a diversified portfolio is very important. And here is a little bit overview what that means. Diversification means that you should cover different assets, industries, countries, and risk levels. So be aware not to have maybe everything put into one specific industry, but try to diversify there as well. You can see now some industries are a little bit better off than others. The same is with the location and the globalization. Also, I mean, the corona is impacted by everyone at the moment, of course, but there are certain things on certain markets that might be less affected than others. In what should I invest now? This is a question we've got a lot in the past, and I think one good thing to look at is to just look on your own behavior in the last few days, and you will see what kind of industries might perform better than others. One, we kind of like clustered them in three different groups. One is the stay-at-home economy. These is, for example, video conferences. So we are using now Webinar Jam, but there is, for example, Zoom or Cisco, other companies as well that are performing not as bad as others. Because, of course, they are booming because everyone is digital and online at the moment. Cybersecurity companies as well is increasing and slightly better. Retailers like Amazon, Alibaba, all of these, Walmart, and so on, are, of course, at the moment in high demand of a lot of clients and customers, as so are home entertainment and games. Today, just this Disney Plus has been launched, so Netflix gets a big competitor now on the market. But if, for example, Netflix, Disney Plus, they will definitely be less hit by the current crisis. 5G and telecom provider is something to watch out, because we all use a lot now our internet, and we all looking for high speed and better connections and faster connections also in the future, because many people will benefit and stay and use home office more often in the future. So this is definitely something where the demand will increase most likely in the next few months. And everything which is actually remote, we see remote learning, remote working, teaching. Here are different tools available, remote food delivery. So all of that is definitely a market to watch out. So here are just a few ideas where you can maybe have your eyes out there and find some certain opportunities to grab. Pharma, that's probably the most obvious that people are looking at, and we thought we have a look at maybe the most important health ETF and how they performed in the last few weeks. And you can see here an overview. They all in negative numbers, of course. But if we compare them to the MSCI World ETF, which is minus 21%, all the important health ETFs listed here are slightly lower in numbers. So they vary between -7 to -10%. So they are not as bad as the MSCI World. So definitely the pharma industry is something that's profits a little moment, also here a little warning. Be careful in who you invest if you do stock picking, because there are many pharmas out there at the moment who put out press releases and that they're working on a corona medicine or something like that. So be careful to really have a look in who is capable and possible in developing a pharma product against corona. And here we are. Olga is typing and answering questions.
Yes, because I love it. There's
great.
So many questions. Yeah, sorry. And if I seem distracted, but I think it's very important because this is meant to be a very interactive, right? So
Absolutely.
I can share with anyone. I've got asked about, which robo in the UK, and I have a very personal favorite here. It's called Exo Investing. It's not very famous at all, but it is a super powerful algorithm that a couple of people have built on the back of 20 years of experience. And basically it will advance hopefully into kind of a generation 2 robo. And it's not a pretty tool. So if you are for easy use experience and prettiness, that is your tool, not for sure. But it does great risk management on everything. So I am personally a very big fan of that robo-advisor in the UK. Again, this is not an investment recommendation, it's just personal experience. And yes, here you see, so part of Olga's balanced portfolio with a robo. Balanced means it's 40-60, so 60% of it are stocks. This is a sustainable portfolio, so I have started building that only at the back of end of last year, actually, because I wanted to try out Jova, which is a robo-advisor here in Switzerland, specialized on sustainable investment, and I wanted to see how the user experience is. It's not a huge portfolio. It currently has something like 18,000 in it. But what is very interesting is how it has performed. And basically you see that on the drawdown, it still provides a loss of 13% net of fees, which I think that in the current market environment is actually a fairly good result. So I feel very happy with this portfolio looking at it now and totally relaxed, because my strategy here is to be in it for the next 10, 12 years. And therefore, knowing that sustainability, or I'm a firm believer in sustainability, for sure this portfolio will recover. But when I looked at it, also with the lens of, somebody who might be a little bit more anxious or where things worry you a lot, obviously you see that this portfolio is suffering, as all of them are, but maybe it is suffering a little bit less. And I think what has helped me as part of everything that is happening with this giant uncertainty is having good information. So having good information from the provider where my money is invested with, and having the confidence that these digital tools, as great as they might be, also are maintained, monitored, and guarded by humans, has given me a great level of comfort. And I think that is very important, probably for those of you who are thinking about starting to invest, whether you do it now buying an ETF and sparing yourself the robo-advisor fee, or whether you are doing it using a robo-advisor to really also look at aspects, not only how much does it cost, but what service does it provide? How is the tool being maintained? Who can I reach if I have a question? Will my question be answered in a timely way? Are they competent people? And even if they inform me only over email, will they be informing me? So to look underneath the curtains might be a really great strategy. But my personal belief is that when you are investing for the long term, you should be investing in the future and not necessarily just in the past. And the future is anything that solves the biggest mega problems that our population and our planet will have, or that is leaning into the future. So you see here listed a couple of themes that might be a really good idea. Digitization, health, Desiree touched on, but also consumption, climate and energy, any form of new mobility, anything that solves the urbanization problems, knowledge society, automation, and you don't find that listed anywhere on any recommendation, but gender equality. Companies that have good governance practice and diverse thinking has been proven in multiple studies from McKinsey to Boston Consulting to all of the bigger banks out there tend to have outperformance in the longer term. So there is plenty of themes if you are looking at building a portfolio for the future that you can lean on. And then the question is, where do you find the providers where you can actually invest? So it's either through ETFs, which is always a good idea. You can use a robo that allows for these choices, so selecting the sustainability filters, or you could make direct investments in any of the emerging startups, which obviously can be a very risky investment. So direct investments, usually the angel investment community recommends to be only 2 to 5% of anyone's portfolio. But there is plenty to choose from. And yes, if you are an optimist right now, you would say it's probably a good time to buy. I just believe it is a good time to buy for me personally. Maybe not all at once in the current volatile environment, because you saw today 8% plus, tomorrow maybe 8% minus again, but it certainly is a good time to start investing if you are in it for the long term, so not just for the next 2-3 years. 10 years plus, low cost, diversified.
We just also got the question if we could give some concrete examples on enterprises. So I assume that's referred to the future mega trends. I think it's difficult for us to give you a clear company for each of these in independence. But of course, for example, in the health area, you have the big runners like Roche, for example, which are definitely working on a medicine for corona. Mobility is everything which is regarding to mobility of cars, but also public transport, electronic mobility, alternative mobility that you can look into. There is not only, also maybe important to look here, is not only at the companies that are very obvious in the first rank. So for example, if you take a car industry that you look at, let's take Tesla, but we also provide that kind of like feed in or produce elements for these products, like a car, for example, so those that produce the battery for it. So there is not always just the end product that is the most obvious one to us, but also a lot of little suppliers in the back end that are very important to look into, that will kind of like end up into another probably webinar if you go into clear, concrete enterprises that are impacted in these mega trends. But it seems to be an interesting topic, so we'll take that up, definitely up, and maybe do a separate webinar out of it to look into mega trends in the future, and that we can deep dive there a little bit more into it, and see also maybe examples of potential ETFs or diversified portfolio funds that are available that produce or invest.
What I do is usually I test out multiple tools. So when I want to get a little bit more information, I test out multiple robos and see what recommendation they would spit out for me, and then make my decision and say, do I go with the robo or do I even buy the recommended ETFs directly? I know it's not great, but this information is out there, so why not use it to your advantage? Because as the transparency increases, you can basically compile and then compare multiple portfolios, which can be a huge, huge advantage. And then still decide that you just buy one single ETF and you do it through a trading platform.
Exactly. Good. And then we are not yet at the end, but almost. We kind of like came up with 4 things to invest in when a recession hits. So this is not just for the corona, this is in general. If the market is kind of like in a recession phase, we have those 4 suggestions for you. One is invest in products that we usually always need. So these are industries that the human beings need anyway, like healthcare, utilities, consumer goods, is always a good way to invest, because we need that everyone every day. Investing in dividend stocks, that can be a good way to maybe generate some passive incomes. Precious metal, for example, gold. We just heard in the news or different information about the gold has not increased as much as they expected it. But on the other side, there are news in it that the gold is kind of like running out and they can't really fulfill the demand that's out there. So if you're interested, that's one of our next topics for next time. You will get in the poll. So definitely precious metal is always something to balance out your portfolio, is a good way to do. Usually gold, definitely crisis, is performing better than stocks. And what we suggest anyway is gain additional knowledge or skills that you can help and invest in yourself to get a better job, to be secure in the market, to not fear about losing a job, but really make sure that you as a person are valuable to the market and the industry, and that you can do if you kind of like invest in yourself. Make the most out of it. So here are 7 tips which have nothing to do with investing, but I came apart this one when I did some research for the webinar today, and I found them very nice because there are 7 opportunities that also this quite new life that we have at the moment maybe provides to us. So we have more time. There are a lot of meetings that don't take part, or we have a lot of meeting friends, going out for dinner, appointments here and there, which don't happen at the moment. So maybe you try to keep a little bit of self-time and personal time in the future as well. Clean out your calendars. You see now how easy it actually is. Something to maybe continue after the quarantine phase. Then reflect and reconsider. It's a good time to do that for money, but any other thing like routines, to rethink your routines, break them up, make changes. Now it's a good time to start with that. For those who didn't start investing, maybe now you have a little bit of time to dig deeper into the topic. Speed and innovation. I think that's quite interesting to see how innovative the people become in crisis or in times like these. There are startups popping up, there are ideas popping up, there are a huge way of trying to find ways to help each other. I think that's quite great to see. I feel that's personally awesome. Better meetings. The meetings are shorter at the moment because they're digital and online. They're shorter, but they're also more effective. Maybe we can keep that going in the future as well. Reconnect and help. Just mentioned, I think it's great to see how people help each other, neighbors, friends, whenever they can. They go and do groceries for elderly people who can't or shouldn't do it anymore. Voluntary work is happening a lot, so that's great to see. We have a cleaner environment. I mean, there have been dolphins in Venice, which haven't been there for years. So I think that's definitely a good time for the nature to kind of like reset a little bit and get healthy again, or a bit more healthy. Modesty and acceptance. I think that shows us definitely that we are not in control of life. There's still kind of like viruses controlling us at the moment. So I think that's probably also something we can reflect on and sometimes be a bit more relaxed on certain things that we can't control.
But the most beautiful thing I have heard was actually in Wies Bradpis. She is a negotiator webinar this morning, listening to it at 5 in the morning because currently I just can't sleep. And she said in that webinar, it was all about belief in the opportunity, because the greatest inventions have always been made during time of crisis. because there is so much movement. If everybody is sitting still or enjoying what they have, there is no movement, there is no opportunity. In the current environment, I think we all are forced to be our best, our most innovative, our best person, our best neighbor, our best wife, husband, partner, and our best employee, because it demands us to think in very, very different ways. And I have chosen to believe in the opportunity that from there, new innovation, new opportunities will come, whether it is for life, whether it is profession, whether it is for the money that you are about to invest. And so I really think we should end this on a very positive note, because yes, it is a huge tragedy. And if somebody had told me you will be locked down talking to webinars in money hours to people that are also locked in their apartments 6 months ago, I would have declared them insane. And yet here we are. So with that, I think we could reveal next webinar's speaker, Desiree.
Yes, we can. And I also have the poll in the back end. I see you're already voting. So we have next week Jude Kelly, who is the second founder of SmartPers and an absolute leading person in the cultural world in the UK. So it's great to have her next week on Tuesday, 8 p.m. here on the webinar. And she will most likely talk about the safety net as it looks like at the moment.
I mean, probably those of you who are from Switzerland, grab the opportunity. We never had the chance to have Jude here to speak. She is an amazing, amazing social entrepreneur. Her foundation is in 20 countries, touches over 2 million women. She is a TED speaker. She is an award-winning social entrepreneur. And when you hear her speak, the only thing that it leaves you with is with confidence and a sense of calm and optimism. And so with that, we of course would love to have your help to grow the Money Hour beyond the current community that is in there. We are doing this and preparing this to be helpful to people, to take your mind off things for the hour that you listen, but also to provide you with actionable, tangible knowledge about what to do with finances and how money impacts your life. And so we would, of course, be delighted to grow this community, which you can do either over the Facebook group or just, signing up to the newsletter and then sharing our stuff. And those of you who are from Switzerland can read the Watson Money blog. Watson is broadcasting kind of our articles every week, every Thursday. But the motivation here is not to sell you any financial courses, is not to sell you any products. We started to do all of this because we believe that there is huge, huge power in financial knowledge for everybody. And I personally believe it is the currency of change, because imagine if all of the money on the planet was invested alongside what we believe in and alongside sustainable values, then we probably wouldn't have a corona crisis. And with that, I think we have still some questions in the chat.
And you also can directly register now. If you found that useful and helpful, please feel free to register for next week. You can do it easily with the register button that you should see now. And the topic will be about the safety net and how to build that.
Yeah, and then we had a couple of colleagues dialing in from the UK. Yeah.
Cool. Very nice to hear that. Also, please feel free to maybe type into the chat quickly how you liked the webinar today. That would be great for us to see, or if you have any changes, suggestions, optimizations, whatever. So please feel free to just type that in. That's always great for us also to improve over time, as we are not pros in that yet.
But getting there, because we believe in opportunities. Okay, if anyone has any questions, type into the chat. We're going to hang around for another 60 seconds to see whether we can answer anything. You can ask anything. We will answer as the best that we can. Right, Desiree?
Yes, we do, always.
But it seems to be good. Everybody waiting for Jude, we can't beat that, Desiree. There is no way we could beat Jude. Other than that, we love you for, as I'm of a Finn background, okay.
Easy, Jonas, thank you. Very
Thank
useful.
you.
Links would be helpful for robo examples. For robo examples, there will be a workshop in Switzerland very, very soon. I think it's in June. But we will also plan a webinar on robo advisors. So that's coming up. If you subscribe, for example, for the newsletter, for the money tip, you will get, or others subscribe for the webinars, you will get reminders when the next webinars are coming up and what themes they are. Or we have also content on it on our website if you want to check it out.
Maybe one thing I have to say about the robos, right? Since it seems to be so much on everybody's mind, you just have to be mindful that the robos, they will charge you a fee for the selection of the product. So it's always good to compare what fee they charge you. Here in Switzerland, the fee can actually be quite substantial. In the UK and in Germany, it is a little lower. So I'm just typing into the chat my email address. You see, I have done tons of research on robos because I just love it. And if anyone has a very specific question, just feel free to email me. I'm very happy to provide any observations or ideas I have about this, because I think I could talk about robos for the next 2 hours, and then Desiree and all of you will be asleep. So I'm going to put in.
And also thank you very much for your input that the bottom part is hard to read. Also because our images are over it, we will make sure we have that design optimized in the future so that we block the left bottom. So it's not covered.
And thanks, Teresa, for the screenshot.
Yes, and there will be a replay. So you should get an email shortly after the call with a replay link that will be sent to you directly. But there will also be the replay available on our website. You can find them in the Connect page. There are all webinars listed, and there will be also the replay. And we will have it on social media over the next few days.
And of course, we have a money hour every Tuesday, 7 o'clock, 7 p.m. UK time, 8 o'clock Swiss time. This was the time that was selected by the community last time as the most convenient. So you find info either through LinkedIn or you find info through our newsletter. And we would be super happy and grateful to have you with us again next Tuesday, hearing Jude and talking about safety nets. Thanks so much, everybody, for being with us. It's always such a source of energy to feel connected to passionate women across the globe. Thanks so much.
Thank you so much, and stay healthy. See you next week.